When you try to code out trading strategies, you work a lot with maths. You are either trying to work and understand a trend, or you're trying to understand and decipher a chart pattern using the OHLCV data, or you're trying to, build some identifiers using either a lagging indicator or a leading indicator or an oscillator. All of this requires an understanding of maths. So what I'm going to do now is start a new series where I'm going to touch upon key foundational concepts in mathematics. And the first one that we are going to talk about today is ordinary least square. Let's dive in. So least square method is a really popular technique. It's fundamentally used for regression analysis, and regression is predicting a value. So the idea is that you use regression analysis to fit a set of data points and provide a prediction as to where the next data point is lying. So it's kind of a line of best fit for a given set of data points. Now, this is a linear relationship, and what I mean by that, it will be clear in very few minutes, in some minutes. All right. Now, let's go and hop on and understand where this is used. Now, example, right? So, let's say an analyst wishes to test the relationship between a company's stock return and the return of an index around which the stock is a component, and use in order to do this, he or she would need to perform a regression analysis, and this kind of approach, or an OLS based approach, can be really helpful to him or her. All right, so let's dive in using some more examples. Before I hop on to this part of an interesting part of the video, I would want to draw your request. Please join in the WhatsApp community. It's completely free of cost. Please hit subscribe and put in a comment if you are interested in more of this content. There's a course which I'm trying to run, which is Fundamentals of Python for Financial Programming. So it's an absolute beginner course. So if you are interested in building a journey, in building your technical knowledge around Python and technology so that you could write and code your trades, please click the link in the description. It's not going to ask you for payment or anything. It's just a expression of interest form. Let's dive back in. So the OLS approach to regression allows us to estimate. Now, what you can see is the pink dots are different data points scattered on an XY plane. They are spread, and these data points could be, stock prices. It could be us trying to find what's the relationship between the current price of a stock and maybe this trailing stop loss and things like that. So you have different techniques that are scattered in the space, and what this is trying to do is essentially calculate the least distance between two between from a line, right? So there's a line of best fitment and it's trying to calculate the least distance. What you would notice across these four different examples, that all of these data points are, different, but the line of best fit is same. Now, what this says is that OLS as the technique is really not that strong, and it only captures the linear relationship. If you see, this is a good example. However, this is a really bad example where you have one extremely outlier data point which is sitting far here, and then all of these points are centered around here. The line of best fit could probably have been this if we could ignore that outlier. So the idea that OLS suggests is you try and find a line of best fitment. How do we do that? We'll talk about in future videos. Here's another example, right? What I have is a bunch of dependent and independents. And the dependent would be, x1, x2, x3, and y1, y2, y3 could be future data point. So this essentially is trying to talk from a statistical perspective. That's what's the R square, what's the R, what's the residual, and all of that for this kind of a setup. So the idea that you need to really get is, I want to find the line of best fit if my data is spread around, and you could use a variety of techniques in Python to achieve that. The simplest would be sklearn OLS, where you have a scikit-learn linear model which will help you fit these data points. There's probably examples pasted here which you can just look at and it will give you a prediction. So if your data is linear and you already know that, And when would the data be in a linear state? If you have a really nice uptrend ticking around a certain stock, like for instance, I was looking at Zomato share price few days back, and if you see the 1 year graph, this is amazingly growing. This is capturing the momentum in a great way. So this is almost like a 45-degree line going up. You could even look at it in a larger time frame. That conversation is not true, but after a point around March 2023, it's just linear in some sense of the word. So the idea is these kind of mathematical techniques could help you understand this a little better, as to if you want to try and momentum, if you want to find to sorry if you want to find some sort of an analysis with a index and something like that. So that's today's video. So the intent is to start a new thread around maths and fundamentals around it. So if you want to hear more of this, put in a comment. If not, put in a comment as well. Thank you. Bye bye.